Okay, so do you want to introduce yourself first?
Sure, yeah.
Okay.
Hey, Matt, how you doing? I'm John Carvalho. I wear a number of different hats. I'm a M&A advisor. Been doing that for about 20 years. Hard to say because I feel younger than maybe I actually am, but also have bought and sold a number of businesses with investors. So, yeah, just call me a deal guy.
Deal guy. Okay.
Yeah.
What's your specialty when it comes to businesses? So because we talked before, it's multi-million-dollar businesses is what you
Yeah, mid-size, like call them, I guess it's lower middle market. So it's not, in $100 million plus. It's not kind of the investment banking bulge bracket world. It's more less than $100 million, let's say. But really the true kind of sweet spot for me would be 10 to about $25 million buying and selling.
Wow, okay. So here in our market,
Yep.
what do those businesses look like?
You
Oil field? Energy?
Yeah, lots industrial type businesses, like brick and mortar type businesses. Manufacturing, construction, oil and gas services. Equipment heavy type businesses, but also have now, especially over COVID, definitely have a lot of technology that's kind of up and coming, right? But I haven't done a lot of technology stuff. I'm more of the brick and mortar type guy.
Okay, we're gonna get on spin-off, so I have ADD, so we're gonna go all over the place here.
Yeah, let's do it.
What are the businesses that flourish the most? Obviously, other than oil, what are the businesses that flourish the most in our market?
There's lots of stuff that's flourishing. Like right now, food processing, anything having to do with food is really big. Healthcare is obviously a big business right now. We have this aging demographic, this aging population of baby boomers. So anything having to do with like healthcare, those are definitely a couple of kind of booming and hot industries. Pet related type industries is pretty big. It seems like pets have always been important, but have become even more important over COVID. They've have a lot of people have gotten pets. People have recognized how important they are as part of the family. So, a lot of industries and businesses related to anything pet related has become very hot. So
how do you scale a pet business, multi-million dollars? How do you get it that high?
yeah, I'm not sure exactly, right? I don't have pets, so
Yeah.
I'll qualify saying that. But I think. I think it depends on the operator, right? A lot of people just like to keep a business at kind of call it sub $5 million. There's definitely different strategies you probably employ if you want to grow a business bigger than that. But it really is dependent on the operator. And again, qualifying too, I'm not much of an operator. I'm a finance guy, right? So I understand kind of putting deals together. I understand where to get capital. I understand kind of buying and selling in businesses, but operating businesses, there's people that have way better specialty than I do.
Okay, so how did you get into this, and where did you come from before?
Yeah, born and raised in Edmonton. Went to the university here, University of Alberta. Came out of university with an accounting degree. Became a chartered accountant, or a chartered professional accountant now they call it. And then, knew that I didn't want to do that, but wanted to move into business valuations, buying and selling businesses. So I got a job at Deloitte. I was there for about 10 years. Quickly realized that, I wanted to work for myself. I just had this kind of entrepreneurial bug in me, and I wanted to test that out. So left Deloitte and then started kind of doing advisory work. And then shortly after that, met a number of entrepreneurs that wanted to buy businesses, and then in addition to doing the advisory work of helping people buy and sell businesses, I became a guy that partnered with some of these investors and bought businesses myself with them. So
how do you guys target a business, and what is it? Revenue? Is it future outlook? How do you guys choose a business? And how do you value
So for me, it's I look at businesses more again from that financial lens, right? Like, are they profitable? I kind of take a look at the industry. Is there room for growth in the industry? You also have to take into account, is the deal doable, right? Like, so if you see a business and you think it's worth $5 million, but the guy wants to sell it for 10, then you kind of start to recognize that, hey, maybe that deal isn't doable because there's just too big of a valuation gap. So that's the things that I look for. And then obviously I try to, as I qualified before, I'm not a guy that's going to run the business. So I need to find specialists in that industry. So I'm on the lookout for businesses that I think are good financially. And then I try to partner with guys that have expertise, and guys or girls that have expertise in that space, that feel that they can run the business from day to day. So that's kind of how I target businesses. As an example, I was sitting down with an individual that had expertise in the food space. So we're starting to look at food businesses now. Just looked at two this morning, actually. One was a food manufacturer. Another one was a food equipment distributor, right? So, I'll get into the financial metrics of it, pass it along to him, and kind of get his spin on, the industries, some of the operating challenges that we might see within those businesses. And then, it really depends on him more so than I, because he's got to run the business after the fact.
So do you, because we talked before about Hermosi and that kind of thing.
Yeah.
Do you do anything like that where you take partnership in the business if you're finding businesses or you're locating them? Do you do any of that?
Yeah, that's exactly what this is with this individual. I've targeted a business that's specific for him. I've known this guy for a number of years. We worked together on a few projects. I like him. I think he's a good operator. So now I'm targeting a specific business in the food space because that's his expertise. And the relationship we have will be partners where, he'll run the business, I'll help him acquire the business. And then we'll also raise capital with some investors. So bring some investors in, raise some capital, and then, hopefully buy more businesses or find other ways to grow it.
And so is your target to scale these businesses to, because you're thinking that, you target $5 million to $10 million. Is that kind of where you're at?
Yeah, that'll be the range that we'll do kind of an acquisition in.
And then after that, you're trying to grow these businesses, or are you?
Yeah, we look at the prospects of it. So there's a couple of ways that you can kind of create value in these businesses. So obviously we use a lot of debt to buy the businesses. Not a lot of debt, but a good amount of debt. And then, as the business generates income, it pays down the debt. Your equity value goes up in these businesses. So that, if we wanted to just be conservative, we could just run the business as is, pay down the debt, and our equity value goes up. So that's creating value. But the other real way to do it is to do both. So pay down the debt, but also continue to grow the business. So as you pay down your debt, your equity value increases. But as you grow the business, your equity value also increases even more. So, and there's a lot of strategies to do that. Some of these older businesses haven't really kind of implemented the technology, things like, SEO, things like online sales. So those are some of the things that we'd implement. And then we also might implement an acquisition strategy where we go out and we buy other businesses that we can tack on to this first acquisition that we do.
Okay.
Yeah.
So who can buy a $10 million business, and how do they do that? How much money you got to put down? How much capital?
I always, for let's say $10 million businesses in this lower kind of, not that a $10 million business is small, but, kind of compared to a publicly traded company or $1 billion company, it is relatively small. So, I always go by the metric of a third of it would be debt that you're getting from the bank. A third of it would be asking the selling party to finance you, right? So it's called vendor financing. And then a third of it would be equity, right? So real round numbers, $10 million, let's say 3.3 million would be debt. 3.3 million would be asking the vendor to finance you, so you pay them back over time. And then 3.3 million would be equity or a check that you have to write in. So, my partner, the partner that I was talking about that had experience in the food industry, and myself, we wouldn't be writing that full check for 3.3 million, but we would find other investors to come in and partner along with us to bring in that equity.
And so do you create a deck that shows this is what the business is right now, this is what we want to do, this is how we want to scale it?
Exactly. That's exactly what we would do. And then, we'd also, in this instance, we'd present to the investors kind of what their return would be, right? So we'd say, hey, you're putting in, let's say $2 million, right? This is how we're going to structure the transaction. This is your return that you'll get on that investment, which in these private deals is typically, 15 to 25%.
Okay. That was going to be my next question.
Yeah.
So like a decent return on their money.
Yeah, very good return.
How long do you take to pay it back? Like,
sometimes we want the guys to be patient, right? Because you don't want to have this big like check that you're going to write back to investors, especially when you have more debt on the at the initial onset of buying these businesses. So, I'd say you try to get the money back to them in like 5 years.
okay,
A 5-year kind of payback on that.
nice. So what's your favorite, like, what if I wanted to target a business, I came to you and I was like, hey, I want to buy a business. I've got capital. I've got motivation.
Yeah.
What would be the business you would say, look at this? Like you talked about grocery space. What are the other businesses that you would really?
Yeah, I like the food space right now. I really like the healthcare space. Again, I'm more bound by who can run this thing, right? So the more important thing to me is how comfortable am I with the partner that's running it, right? Because it really is the quality of that partner that I feel is going to make the investment successful. And because I'm a finance guy, I kind of see it through that lens. Like I'll see it through the lens of how good are the numbers? How much are we paying for the business? Can we get a return for the deal structure that we're able to put in place? So that's the lens that I kind of view these transactions through. But anybody that I partner with has to view it through the lens of, hey, can I grow this thing operationally? What are the risks around, some of the potential downfalls and, some of the obstacles that we might encounter? What's the market size? Is there potential for us to do things within this business that the old owner wasn't doing that is going to is low-hanging fruit that we can make this business better overnight? So, I'm kind of scared of your question here, Matt, but I feel like there needs to be a lot of variables in place for it to be the right type of deal, and it's not just focused on industry.
Okay, retirement homes.
Yeah,
are they a good investment?
Yeah, I think they are a good investment. There's a couple of opportunities on the healthcare space around not the retirement homes, but the management and the actually running the retirement home. So you have the contract where you run these facilities and you provide all the nursing and all the care around it. So, I like that. I like those a lot. Yeah.
So the owner in that scenario would be, they own the building, you run the business, everything from, the nurses to the accountants, all that kind of stuff.
Yeah.
Right?
So there are a couple of businesses that just run like the recruiting of the care and the nurses, right? Which is, as you might know, it's hard to find nurses nowadays in this industry. So they actually have the management contract for these facilities, and some of the facilities are government owned, some of them are privately owned. So there are some businesses out there that'll do that service.
Oh wow!
Like Nurses Next Door is kind of a concept like that, where the nurse will go out to a person's residence, but they provide the nursing, they provide the training. They go out and actually find those customers. So there are companies like that I think are pretty cool.
And that's kind of like a franchise, Nurses Next Door.
Yeah, Nurses Next Door are a franchise for sure. But there are other companies that do like facility management, the care facility management.
Okay, nice. So how do you, other than that, you said you have a coaching business. How do you really do your hustle?
Yeah, so I guess over the pandemic, it was slower out there. There weren't a lot of deals going on. So I was sitting in my house thinking about what to do. And I always found this kind of like, lots of people want to do this. It's kind of a sexy industry, saying that you're an investment banker, an M&A, and people want to buy businesses. There's definitely a need of people that have to sell their business. I've talked about this aging demographic that's happening right now. So there's these baby boomers that have come, they're 60, 70 years old, but still in their business, but wanting to retire. And I really saw a lack of knowledge for how to properly sell a business and how to properly buy a business. So again, sitting in my house, lots of time on my hands over the pandemic, I thought, you know what, let me, just provide some educational information out there. Let me package it. Let me bring some other experts in globally that I have connections to. And let me kind of sell courses around buying a business and selling a business. So did that. I did the course around, how to sell your business, some of the obstacles to think about. and then did a course on how to buy a business with templates like due diligence templates, letter of intent templates, valuation templates. And I packaged those 2 courses and I started selling them online.
So what's the website where you sell that?
Yeah. So again, I'm not as sophisticated as you. You got an awesome setup here, by the way. Acquisition Playbook is the one course that I sell. And it's actually, so I have a website that's a lot of free information on it. It's called divestopedia.com. So anybody can go on there. There's right at the top bar, it's called Masterclasses. And that's where you can see the courses that I sell. So again, Masterclass, I call it a companion guide to sell your business. And then the acquisition side, I call it the Acquisition Playbook.
So your ideal client right now, it's not somebody selling a $10 million business. They're coming to you or to somebody who has experience in that. Like, who's the target audience? Like somebody selling a salon or something?
No, it would be that middle market. So on Divestopedia, it would be, we're again targeting this lower middle market. So businesses that are kind of sub $100 million. And that would be the target for our, the course on selling a business. So just to give you a little bit of background on that, I've been thankful and humbled to be able to build kind of a global network around M&A advisory, around these merger and acquisition professionals. So I reached out to 3 guys that I know, 1 guy in Chicago, 1 guy in Connecticut, and an investment banker out of the UK. And I said, hey, like, we're all slow, we're all in our houses. How about we get together once every week for the next 10 weeks, and we talk about different areas of selling your business. So we did that over a course of 10 weeks. We have 10 different areas that people need to think about and touch on selling their business. And it really has this global perspective from really 3 of the, I think 3 of the best, investment bankers in kind of this space of selling, $50 to $100 million businesses. So that's the target market for selling businesses. And then again, on the buy side, on buying businesses, my expertise has been in that space of like 10 to, I've been involved in businesses of up to $150 million on the acquisition. So that's kind of the template or the target market that I'm really kind of catering to, is that 10 to $150 million business.
So your course probably barely scratches the surface on a $100 million business.
It gives you all the tools and it gives you all the steps, right? It's buying a $10 million business is very similar to buying a $150 million business. It's just the amount of like the dollars that you're dealing with are obviously bigger, right? So, I think the steps and the process that you need to employ is really the same. And it's actually quite surprising that there are a lot of large businesses out there that could implement this strategy of going out and growing through acquisition. But they've never done it before. They've never tried to do it. So they find it very daunting to start off with. And a lot of times, like you'll have to look at 50 businesses that are for sale before you find 1 or 2 that are actually purchasable, if that's even a word, right? Mm-hmm. Because there's just so many variables and so much difficulty in, things that could go wrong when you're looking at buying a business, right? Again, it could be that you think the business is worth $5 million and the guy wants to sell it for $10 million, right? Obviously, you're not going to waste a lot of time in that business. It could be that you, everything's perfect in terms of, the type of business that you want to buy, but there's one area of the business that might have some obstacles or challenges to get over. So, I really just find that there's such an opportunity to go out and buy businesses, but a lot of people haven't done it. So there's a market for it, and that's why I put the course together.
Nice. Okay, so I want to talk. We'll talk about both. So I want to talk about buying business. I want to talk about selling business. Yep. But let's start with selling businesses, because a good friend of mine, you and I talked about it. Like, obviously, I'm a real estate agent. I do commercial real estate.
Yep.
I talked to him about selling his plumbing business. After talking to you, I actually realized that I had no idea what I was doing.
Okay.
Like I have experience with it. I do multifamily. I know how to analyze a business, stuff like that. After talking to you, I'm like, yeah, this is one that I would hand off. Yeah. So, talking about his business for a sec, like a plumbing business, makes a lot of money. He didn't give me specifics, but he makes in the millions of dollars for his business.
Okay.
So how do you, number one, find a buyer for that business if it's not just through networking, and how do you justify the value for that type of business?
Yeah. So, I mean, there's specific ranges based on industry, based on size, based on some of the characteristics of the business. So you kind of like with the value, it's more to set expectations, right? Like, and you would understand this being in real estate, right? So, you know, you find a client, they have a house that's worth $800,000. They really want $1 million, but you know the market is 800,000, right? So there's kind of that information or that valuation gap there, right? So either the client has to get to a more reasonable understanding of what the market is and what the value of their house is, or it would be really difficult to go to market with that house at $1 million. Like, would you agree with that? Or
Yeah, completely.
yeah. And you could go to market and it could sit there, right? And then, you know, as buyers come in and start offering closer to that $800,000, maybe the seller realizes that, okay, my house is really worth 800 versus the $1 million. So, you know, and that's kind of what I do at the beginning. So I'll go in, I'll give them my opinion on what I think the business is worth, but really the market's going to dictate, right? And then I think the other thing is too that you want to kind of convey to my client is, okay, it's not all going to be cash. Somebody's not going to write a check for $10 million for your business. There's probably going to be, as I mentioned before, that vendor financing. So somebody's going to be asking you to finance a portion of it. And then you give them a typical range of where that vendor financing might be. So that's kind of the start in terms of like valuation. Now, in terms of like who the buyers are, it's dependent on a couple of things. It's dependent on how confidential do they want to maintain the sale. Obviously, you're trying to be as confidential as you can. You don't want your competitors to know. You don't want your employees to know in a lot of cases. So, but if there's hypersensitivity around, you know, the person that's selling their business being super sensitive around, we need to keep this very confidential, then you can only go out to a limited number of parties, right? So you try to pick the handful of parties that you think might be best. And then if you run through those parties and you find out that none of them are kind of in a position to buy or want to buy, then you have to widen that net a bit. So it becomes almost like a game of you know, confidentiality versus how attractive the business is and how many buyers are going to be like really compelled to actually come in and put an offer on it.
Mm-hmm. And I've found dealing with people all the time, when it's your primary residence, you can kind of put emotions and all that kind of stuff. But when you're dealing with an asset or a rental property, what I've found is that there's a certain price in which people are willing to sell. Probably with a business too. It's like you've been running your electrical business for the last 25 years. You're not ready to retire yet, but there's a price that you're willing to sell at. So how do you get that person over the hump? Maybe they're like, I'll sell my business if I get $12 million, I'll go retire. But otherwise, I'm just going to make my millions of dollars for the next 5 years until I'm actually ready to retire. So how do you get that person over the hump to show them?
Yeah, you know, that's tricky because like I'm running a business too, right? So, and a lot of my fees that I get on helping someone sell a business is based on that commission on the back end. So I need to know that they're aligned with the value expectations that we both set. And, you know, if and when I find them a buyer, that they're going to pull the trigger. So I really find that if they had this lofty expectation of what value is, and I don't believe that I can achieve that in the marketplace, it's really hard for me as a business owner to be able to work with them because I would never earn a fee, right? So, and, you know, another thing that you brought up is there's a lot of emotion tied up with a business, right? It's not just an asset. It's something that you've built over, let's say the last 10 years, 15 years, 25 years. There's ties to employees. There's kind of this legacy that you have. There's this idea of what do I do after I sell the business, right? So you kind of have to make sure that the owner is really emotionally ready to move on to that next phase of life. So for me, the client, a lot of times clients will be assessing if I have the skills, if I'm the right person to help them. But on the flip side, I'm also assessing them like, hey, are they ready to do it? Are they committed? Do they understand the valuation that we both think is reasonable for the business? There's lots of variables and there's lots of dynamics in the game of selling a business.
Do you ever let somebody stay in with an equity stake instead of maybe a vendor take back? They keep 33% of the business?
Yeah, for sure. Yeah. Just actually an email driving here. I got an email with a person that put in a bid on is talking to us about potentially buying the business from one of my clients. And that's a question that they asked. Hey, would the seller be interested in retaining some of the equity? In this case, it's probably not. Mm-hmm. But definitely, there's lots of different ways to structure the transaction, and like I try to get that up front. Like, what is reasonable for my client? What would they want to accept? So really understanding what their objectives is at the onset to know. Then, if the deal structure makes sense or not. So in this specific instance, my client, he's 65. He's got grandkids. The reason he's selling his business is because he wants to move on, spend more time with his family. So taking an equity position is probably not something that he wants to do. So again, really understanding the objectives up front helps me figure out what transaction structure is going to make sense for my client.
Okay, so with your... You might be pulling in investors. You might be pulling in a vendor take back. That's a lot of money going out. So how do you cover that?
Give me a little bit more detail on the question.
Well, for example, so let's say they do a vendor take back.
Yeah.
What percentage are they going to do a vendor take back at?
Yeah, a reasonable range is 10 to 30%.
Okay, yep. So you're in 10 to 30% for a third.
Yep.
The other third you're doing private financing, so you're putting a lot of money into interest. You're borrowing a lot of money.
Yeah, exactly. On the acquisition side, for sure.
Yeah. So how do you make sure, because if you just took that business and then it was stale and it didn't grow, that is probably not a good investment. You're intending for this thing to grow. Yeah. Because you've got to cover a lot of.
Yeah, exactly. And that from a financial perspective, that's exactly what I'm doing. I'm kind of looking at the downside scenarios and saying, okay, if we were to finance it and structure it this way, could we service the debt, right? Could we, if we didn't grow, if we actually started to decline, what happens then? How do we mitigate our risk, to make sure that this thing isn't going under, right? So definitely one of the biggest pieces of doing acquisitions is really kind of like mitigating risk and the deal structure to make sure that you kind of have all your bases covered.
Okay. So plumbing business.
Yeah.
Going back to my friend, who would be the buyer for that type of business? Would it be like another energy company, or not energy company, but like maybe an electrical company, maybe a home building company?
It could be another construction company that maybe doesn't have that expertise, and they want to, maybe they do just the general construction, but they really want to have that expertise on plumbing because they, usually the specialty contractors will have higher margins. That would be kind of the first place I would go. And a lot of times it could be, some of these investor groups that bring in a professional like your friend who has plumbing expertise to say, okay, this is a decent market. We'll come in, we'll partner with this operator and we'll buy out your friend and kind of replace his expertise, let him move on to whatever he's going to move on to, and then replace that with someone else that an investor group is backing. So those would kind of, without knowing more details, those would probably be the two areas that I would go down.
And so every time you answer, other questions pop in my head, so I got to make sure I should have a notepad here. Owner, operator.
Yeah.
In a lot of these businesses, when they're great salespeople or they're great customer service, they're a huge part of the business. So how do you replace that person? Like some people will tell me, I am the business. If I'm gone, not just as a financial aspect, but like as soon as they're gone, maybe they lose contracts. Maybe they have contracts for this builder and this builder, right? Yep. So how do you fill that gap when the person leaves? It's
hard to sell those businesses, right? Because there's lots of what we call personal goodwill. So it's tied to the owner and not the business. So you don't want to admit that. Like if you're selling your business, and you don't want to be. You don't want to lie to anybody, but you want to position the business that's kind of most attractive to potential buyers. So you want to say that, those relationships are tied more to the business, more to the brand, There's customer loyalty because they've been kind of working with the company and your employees for X number of years. So you definitely want to paint that picture and tell that story. But you know, and that's why the vendor financing is there. So people will use deal structures to make sure that the old owner continues to be motivated to transition the business to a new buyer, right? So if he knows that 30% of the purchase price is still owing to him and paid over time, he's definitely going to be more committed to make sure that those relationships that he has transition over to someone new, someone that's buying the business.
That's why I thought about the equity position. Maybe you keep them in as an equity position there.
Yeah, for sure. Yeah, and people try to do that too, right? Is tie them in equity. Or they also try to find other key employees in the business and try to partner with them and say, hey, like, I know you're just an employee now, but would you take 5% ownership and we'll back you? So it creates that longevity, right? Like it's harder for an employee that turns into an owner to then leave after you've bought in the business. So.
Mm-hmm. Yeah, that's the integrator, right? Like you and I talked about that rocket fuel, the integrator, and that's like the essential piece of the business that not a lot of people talk about, right?
Yeah.
So do you try to target an integrator in a company and say, hey, this guy is the reason that the company does what it does?
I try to understand that for sure. Try to mitigate it more because then you put a lot of leverage in kind of an employee's hands, right? And sometimes it complicates the deal. So now not only are you negotiating the deal with the guy that's selling the business, but you're also trying to negotiate this equity piece with this employee that has always been an employee and maybe doesn't really understand the nuances of being like a business owner. So I find that sometimes it complicates deals, but it really is kind of deal specific. Mm-hmm. So if there really is a key guy, then I will tell the buyer, hey, you probably want to tie up this key guy. You want to negotiate either some sort of like bonus plan or some sort of equity plan for him because he's, integral to the business.
Or a non-compete.
Yeah.
Like
but that's
part of the
harder to do, right? Like for sure harder to get a non-compete because now this guy knows he has leverage.
Mm-hmm. That's true. Or my friends, they have a door company and it's the same kind of thing happened.
Okay.
So they want to keep you on for probably 2 years so for the transition and then have that vendor take back. That's kind of like the key in these businesses.
Yeah. Okay. Yeah. I find being super frank, I haven't seen any deal kind of in that $10 million space that doesn't have like some sort of vendor financing component to it.
Okay.
Yeah.
So let's talk about buying businesses now.
Yep.
What's the target business to look at? And is it when you kind of see these mom and pops, like I'm going to use this term very generically, like, but a mom and pop, they don't have the SEO, they don't have the marketing, they have no idea how to use social media or any of the channels that you can really scale businesses at.
Yeah.
Do you target those type of companies when you're looking to buy?
Not me specifically, but there are some people that target some of these smaller, call it $1 million businesses. You're kind of buying a job, right? Like you're going in there, you're replacing an existing owner. You'll be able to pull out a salary out of the business, but you probably have to like really work in the business. Like a business that has less than $1 million in revenue probably doesn't have a really deep management team. So that's not bad, right? Like if there's an employee that says, I'm done being an employee, I'm done working for other people, I want to go, buy a business. It's a great way to do it, right? Because you don't need a ton of equity. You could probably raise like friends and family type money, like 200, 300 grand and buy $1 million business. And you have a really well-paying job, that you can eventually grow and then start to build that management team. So it's a great way to do it. I will target businesses that are a little bit bigger, that already have a management team, and then we just bring kind of a leader in the business that can work with the existing management team and continue to implement higher level strategy stuff like these processes, right? Like what can we put in the business that's going to expand our customer base? How do we grow our sales team to really expand our customer base? How do we move into different geographies or different products to, exponentially grow the business? And then, my expertise is how do we tack on acquisition of other businesses to really kind of, grow top line, grow exposure, grow diversification, like, in a real kind of expedited manner.
Mm-hmm. What's the bottleneck for a $10 million business? Where do you see the most resistance? Like,
Yeah, I mean that's a good question. You know, I think $10 million. You need to, again, like, start to think about diversification, right? Either by area, like, so geographically, or, you know, adding different products or services at that point. Like, a $10 million business is a sizable business, right? I would say that, you know, less than 10% of businesses even get to $10 million. So, you know, you've done a pretty good job of getting to that space. But now you need to think on, like, you know, again, expanding geographically or just expanding by kind of product service line, I think, at that point.
and then if you're, let's say you're a $10 million business.
Yep.
And you want to get into acquiring other businesses.
Yep.
Where are you kind of looking at targeting similar type business, or are you looking at targeting like $3 million businesses? And is that a good strategy to build your company?
Yeah, so there's a consulting firm called McKinsey & Company, a global consulting firm. They did research on, like, what is the best strategy for growth. So, you know, the one option was just organic growth, pure organic growth. You just continue to expand by product and geography by doing it organically or greenfield. The second, they call it a big bang acquisition, where you go out and you do one massive acquisition. So again, if you're a $10 million business, you'd go out and do another $10 million acquisition and double in size overnight. And the third way to do it would be to do smaller acquisitions of lots of smaller acquisitions. So that would be 10 to 20% the size of your business. So if you're a $10 million business, you would do a $1 to $2 million acquisition, but you do that like multiples of those, right? And they found that last option, or that last alternative, was actually the best to grow a business and to create lots of value, right? And to your question before, like, I think it's a combination of a lot of growing geographically, so that might be a strategy, or growing by diversifying your product line, or, you know, like, moving into different verticals and different. But the real art of it is just getting better at doing acquisitions. So practice makes better. That's a term that they use in this report that I really like, right? It's doing it. And each time you do it, understanding the challenges that you had, and then finding solutions to overcome those challenges and be better the next time you do it. So you can, like, kind of start to replicate that process of going out and buying these smaller businesses in whatever strategy you choose. Again, either like expanding by geography or expanding by vertical, either horizontally or vertically, right? So yeah, I think it was a pretty cool report, and it really showed that is, you know, kind of what I'm preaching here, of going out and acquiring and doing growth by acquisition is actually creates the most value.
And so how long does it take to, like, I totally get what you just said. You get better,
Yep.
like, with repetitions, but I think just going and partnering with somebody like you would be a much smarter idea. It's like the analogy of standing on the shoulders of giants. It's like, hey,
I'm not a giant. You've seen me. So.
Yeah. So just like, hey, I'm going to partner with him, and we're going to be exponentially further forward, right? So is that kind of a strategy that people take, or do they? Because I know people like to really tighten up when it comes to investing, and that would be an investment in you.
Yeah.
If I had a business, $10 million business, I'd be investing in you to, you know, show me the way and take my business to the next level. So do you see that?
Yeah, I do see it. And in fact, so I worked with, initially it was a client. So it was an individual that wanted to go out and buy a business. So we had this client advisor relationship. And I introduced him to a couple of businesses to buy. And as we worked on, you know, searching for these businesses, we just kind of became friends, and I really liked the way he operated. I liked the way he approached things. And that client advisor relationship moved to a partnership relationship. And then, you know, so we bought a first business together, and then we bought a second business, third business, a fourth business. And that really was a really awesome chemistry, because he did exactly that. He used my expertise to go out and find capital, to go out and find these businesses, to go out and structure deals. And we built together a pretty sizable business. And, you know, now I'm trying to do that with others, trying to replicate that success that I had with that one partner, But I do think, yeah, if you could find somebody that has this expertise, that knows how to go out and buy businesses, then you can build that process and that skill in-house. And I find the businesses that are really good at executing on the strategy start to build, like make the investment in-house. It's to say, this is a strategy that we're going to pursue. So we're going to find somebody, we're going to hire somebody to go out and just search for businesses. We're going to find somebody in-house that has kind of the finance expertise, that can raise capital and can structure these deals. So, yeah, I definitely think that that's a strategy that more people can invest in. But there's lots of things that can go wrong, and I think people find that it's daunting to look at 100 businesses to, on average, buy 1 out of 100, right? But if you build the processes in house, like it's you can outsize your returns.
Mm-hmm. And do the kind of the evaluations or the skills or whatever you guys are developing work for most businesses? Because like Hermosi, gyms, right? And for somehow took that to the next level to every type of business. I'm sure he's got every business in his portfolio. So does it kind of like go across the board with different types of businesses?
Yeah, I mean, some businesses, like let's say with the gym business, just thinking this through in my head, I hear out loud, thinking this out loud as we're on the podcast. But, with the gym, if you were to build a really amazing brand, it might be easier just to go out and find the location. Say, hey, like we're not in this location. We already have an amazing brand. We have a cookie cutter of what the gym looks like, the equipment we have to buy. So go out and buy other gyms might not be the way to do it. You might be able to go out and buy like gyms that aren't performing very well, right, at a really low price. And that might be a strategy where you can do an acquisition and just say, hey, I'm going to buy this location. I'm going to buy all the equipment, but it's going to be at a really discounted price. So that might be a strategy. But in that type of business, I would think that going out and, really finding the locations would be better than going out and buying like an existing gym, right? So it kind of depends on the business, I think, if it like an acquisition strategy works or it doesn't work.
And so if you're looking at a business, in what scenario would you go look at a business? Doesn't matter what business it is. I'm going to acquire this business or I'm going to buy this business from them. Or why would you not go there and be like, give me an equity stake. I'll teach you how to make your business, take your business to the next level. Because the people that aren't ready to move outside of, they're not ready to retire. They're not ready to sell their business.
Yeah.
But like you guys are leaving so much money on the table. I can show you, because it sounds like you have this area of expertise where you could take businesses to the next level. So like, would you consider that as well, where you just come in as a partner and just help out the business? Or
yeah. And that's kind of what I was trying to do with my course, right? Is say that, hey, there's a real opportunity out there for people that if you learn how to do this, how to implement this, then it could be a real game changer on growth, right? I feel like it does take a mindset. It takes people that are a little bit more comfortable with risk. It's not easy by any means, right? Like once you get the process down, it becomes really achievable, but it's not easy to start with. So definitely, I think there is an opportunity for me to partner with people, and that's what I'm trying to do, right? The real kind of scarcity is, for me, is finding the operator that I feel is really good and feel that can execute on this strategy. That's I think the scarce resource. There's lots of guys like me that can do deals. There's lots of capital out there, but the person in the middle that can run the business and not only run a $10 million business, but eventually run a $100 million business, that's a scarce resource. And I'm picking, like I'm making bets on those guys. And, out of take my partner, for example, the guy that he and I bought a business together and then bought several businesses together. I've probably only run into, let's say I've worked with 1,000 entrepreneurs. He's probably like 5 out of 1,000 of guys that I feel that could like execute to the level that he's executed at.
So what type of person are you looking for that role? They would be that integrator role, probably not so much the visionary looking for the future, looking to scale, more of the like runs it with a fine tooth comb, type A personality. I know how to run a business.
Yeah, actually he wasn't an integrator. He was the guy that, he was that visionary, right? Where he could take the business. He also had a really good acumen for finance, right? Like, where do I find capital? He was charismatic, so you know, people that can that investors will trust and will kind of say, hey, yeah, I believe in this guy, right? I believe that he could do it. And then also charismatic in the fact that employees will follow him, right? So, with we got up to, we were probably about 1,000 people, in our business, and people saw him as a leader, right? So I think there's lots of dimensions, but the finance, the charisma, and just the vision from like knowing how to operate it, but maybe just not doing it yourself, but putting the right people in place.
Okay. With the weather,
yep,
it's Canada. I probably the biggest thing that I hear from people of affluence is, I'm gonna get out of here eventually.
Yep.
I'm gonna go to Los Angeles, Las Vegas, Phoenix, wherever it happens to be, and they have businesses here, or they have something that they can make money off of. So let's say you own a business here, multi-million-dollar business, and you just want to get out of the winters, and you want to get down, and let's say you want to live in Las Vegas for the rest of your life.
Yep.
How do you take the business that you've got here, and do you sell the business here? Do you buy the same business down there? If you love it, you know it. Do you build? Do you take your business here and you just expand? And and then the second part would be, how do you keep that business running at the peak performance when you're gone and you're never coming back to Canada?
Yeah. I think there's a couple layers there. It really goes back to the objectives of the owner, right? So if the owners, can sell it for $50 million, is that enough, like, for you to fund the lifestyle that you want to live, right? And if it is, maybe that's the right decision for them, right? Is just to say, hey, like, I'm going to create liquidity around this business that I've built. It's going to be generational wealth for myself and my kids, and I'm going to invest in different asset classes. Maybe you have, like, at that size of business, you'd probably have a secondary management team already. So maybe you say, hey, like, I'm just going to bring in, I'm going to professionalize the business. I'm going to bring in an executive that's, maybe I'm going to give them some equity. Maybe they're just going to be a very highly compensated, CEO, president. And I'm just going to move, like, and the business is going to run without me there, with this new CEO that, again, I'm going to pay a lot of money to, but I know it's going to be well managed, and he's going to be a good steward. He or she is going to be a good steward of the business going forward. Or there's things like, I kind of alluded to it, but a management buy-in, right? Where you have this management team, they've been loyal employees. Now you want to help them create wealth. So you sell them a portion of the business, but you sell it to them over time. So you say, listen, I won't gift you 20 or 30 or 40% of the business, but I'll sell you, but you could pay me back from the cash flow that the business has been generating. You could pay me back over the next 5-10 years, right? 10 years would be long, but that'd be very generous for somebody, but it's done. Or you might have the next generation in your family that has come in, right? So you could sell your business to a son or a daughter in the business, or you could gift it to them, right? I just had a client that they had a business. It was, kind of in that $20 million range. They had made a lot of money. They didn't need any extra money to kind of fund their lifestyle. So their son came into the business, and they sold their business to their son, but financed a big portion of it, right? So there's lots of different variables, and it really kind of is based on, how much money do you need to live the lifestyle that you want, and what is your ultimate objective? So in this example that I just mentioned, where the son came in, they really wanted to give their son, they wanted to keep the business in the family, and they wanted their son to be able to run it. They just kind of wanted to be out of the day-to-day. So they didn't need the money. They just wanted to be out of the day-to-day, and their son kind of facilitated that for them.
Okay. Let's say I have a $10 million business.
Yep. We're using this $10 million business
as an example. It's just easy numbers for me.
Yeah, for sure.
So we have a $10 million business. I'm going to the States.
Yep.
What's my strategy? I know that it's not going to give me the lifestyle that I want. Okay. $10 million is not enough, like, where I want to be. So I'm either
I've
gonna
seen your lifestyle. So.
yeah, it's expensive. so we got the $10 million business. I could sell it. I can move to the States, and then when I get down there, I can invest in a new business. I could start the exact same business down there, or I could go something completely different, or just invest, right? Like I could wear many different hats. What would be the strategy as far as, would I call somebody like you and say, hey, this is what I want to do. I want to sell my $10 million business. Would you buy the Edmonton part of it? Or not even the Edmonton part of it? Would you buy a portion of it? I'm going to go to the States. I'm going to start the exact same business. Let's say it's an electrical company. I'm going to start MF Electrical in the States. Now we're going to own them all together, and we're going to expand not only with your expertise, but now you've got to either be the president here. Maybe not you, but somebody. You've got to be the president here. I'll be the president down there, and now we run this company together, and maybe we expand to the West Coast and everywhere across the board, right?
Yeah, I mean, there's lots of different flavors of alternatives for whatever the objective is. So in that instance, I would say let's find a private equity group that has experience in kind of this electrical contractor space. Let's figure out, let's put the plan together on how you grow a business in the U.S., right? So let's articulate that for a particular investor. Let's also figure out how much money that you want to take out for selling, let's say 50% of your Edmonton operation. And let's find that right partner, because there again, lots of flavors of investors out there, and there would be a partner that we'd be able to find that's happy to partner with a really young, smart, aggressive guy like you that wants to grow the business and is willing to give them a portion of the equity to kind of ride that, but also help you facilitate that lifestyle that you want of moving down to the U.S. So, private equity would probably be the right route for that, and specifically finding a private equity firm that has the expertise, that has the contacts, that has the network, that brings kind of the resources that you would want to be able to kind of execute on that strategy.
So who are these private equity firms, and where do you find them? Is it just through word of mouth? Is it just because you have experience?
Yeah, there's lots of databases out there that have a full kind of list of private equity firms, and then you sort them and you filter them through, again, industry expertise, people that want to. Some private equity will come in as like growth capital, right, where they're taking a minority interest in your business, just providing you capital so you can go out and maybe buy another business or move into a different region or whatever. There are some private equities that come in and want to take majority, right, which in this notional example is probably you wouldn't want to be in a minority position. You'd probably want to continue to have control to continue to grow the business. So, it kind of comes down again to, okay, what are the objectives that we're trying to achieve? And then there's lots of like databases that you would find to find exactly, to filter down, okay, these are the specifics, these are the industries, this is the dynamics of the transaction, who are the parties in this space that would kind of facilitate that.
Okay, so do you deal with a lot of businesses that own the real estate and keep the real estate, as far as like it's the building or whatever, and they keep it and they rent it back to you or lease it back to you, or later on they'll get the money for it? And then the second part would be, let's say somebody owns a business and they're approached, let's say it's a paint business, and they're approached by a big Sherwin-Williams or one of these big companies to buy them. Could they come to somebody like you and say, this company offered me, 11.6 for the company. What can you do? Or should they shop it around? Because like these companies don't know their valuation. If somebody's just approaching them out of the blue, they're a paint company that has this much revenue. They have no idea as to what their companies were. So should they be approaching somebody like you, or should they be seeking other options?
Yeah. So let's talk about the real estate first, because the real estate is stuff I deal with all the time. Like I don't particularly do real estate. I will bring in a professional to value what the real estate is worth, and then also provide kind of fair market value terms around what a lease might look like. So the options are, you can sell the real estate. Typically buyers of businesses don't want to buy real estate because those are two separate asset classes, right? So, but in some cases they do. Sometimes they feel like the real estate is valuable to the operations of the business, so they want to kind of control that. So it's assessing like who is the best buyer. Is the buyer of the business also the buyer of the real estate? And if it's not, do you want to enter into, rather than just being a business owner, now do you want to be a landlord with that new business owner as a tenant? Or do you just want to get out entirely and then find a separate owner for the real estate? And you would know this better than anybody, but a buyer would definitely, if you could lock in, that business and that new business owner into like a longer term lease, it's obviously more attractive to when you're selling the business. So I'll partner with a lot of like a Colliers or an Avison Young to really evaluate, okay, what's the best use of this real estate? Who are the best buyers? And then how do we structure a lease agreement that's going to maximize value? So I do that lots. So that's the real estate piece. Does that answer your question on that?
Yeah, and I feel like that's a huge thing, especially like maybe in my experience in these lower businesses, because somebody can actually get out and retire and they have this building paid off, and they're going to have consistent revenue for the rest of their life because they own this building. Right. So I feel like that's a big selling feature for people getting out, but it's those people that want to get out, that are just ready to retire. What am I going to do after I retire? Well, I'm just going to collect rent on my real estate. That's about it.
But sometimes though, in kind of the business context, it almost creates a boat anchor in some instances. I had one business. It was a really great business. Say the business was probably like a $10 million value for the business, but they were in this one potential buyer called it the Taj Mahal of like real estate, right? It was this big, beautiful building, but it was way overbuilt for what the business needed. So a buyer, like, to be stuck in a lease for that massive building where the business could have operated in a much cheaper and a much more desirable kind of location and stuff, it was almost like a boat anchor, which made selling the business a lot tougher. So you kind of have to make sure that the real estate is reasonable for the buyer that comes in. Like it's either big enough to kind of facilitate expansion. It's not like overbuilt. And it really depends on the buyer. Like the buyer is going to dictate if that real estate is right for the business or not, right? So sometimes owning the real estate can cause like now 2 assets that you have to sell. And if the asset is without a business, it becomes, the real estate is without the business in it, it becomes a lot tougher to sell.
That's what I was thinking too, because perhaps you have somebody who buys the business, and the seller keeps the real estate. Now they've got to lock them into a 10-year lease at a pretty decent price. Now they sell that as a piece of real estate, and so you've got 2 deals for the price of one, right? Yeah,
you could, or the buyer could come in and say, you know what, this real estate, it's not the right real estate. Like I have better real estate that I can move the business into, but now you have a vacant building, right? That now you got to find a tenant for. Now it might be tougher to actually sell. So, and that's why I bring in guys like you, guys that have the real estate experience to think through. Okay, what are the options? What is really going to maximize value for the client? What is the client trying to achieve? Are they okay with being landlords? Some clients don't want to be landlords, right? Mm-hmm. Some clients just want to get everything. They want to get the business. They want to get the building. They want to get everything off their hands when they sell. So really thinking through that at the onset is important.
Okay.
Yep.
Okay, so that answers the real estate question.
Okay.
Now, what was the other question?
The other question was around the Sherman-Williams example.
Oh,
so if you have a paint company, the Sherman-Williams approaches them, what would I do? So, the answer, I guess, would be it depends, and that's kind of copping out a little bit. But I'd look at, okay, what is the offer? Is the offer a pretty good offer? And if it is, and I think it would be hard to go to other parties to kind of get other offers, I would say, okay, let's really explore this offer and let's try to maximize value in terms of like trying to up the price, trying to improve the terms, trying to create more certainty for the seller, right? So that would be kind of the first analysis. If it was a really like hot business that, I know that there would be lots of market interest for it, I wouldn't totally dismiss the offer that we have at the table because, you don't want to piss off a guy that's interested in and has put an offer on a business, right? It's tough to sell these businesses, and I understand the challenges that that I have a lot of times in selling these businesses. So I wouldn't want to just dismiss an offer that we already have, but I would really kind of look at it and say, okay, well, we can quickly get potential interest from other parties to just gauge what other offers might be. So I would run kind of more of a competitive process. But it really is dependent on, the circumstances, depending on, how attractive that one business is. And it depends on how good that initial offer is from, the Sherman-Williams that comes kind of unsolicited and puts a bid in.
And like some of these companies want market share. That's just what they want.
Yep.
So like they'll overpay for certain businesses, like in
They might, yeah.
to come into, let's say they're not in Canada yet, and this company wants to come in Edmonton and Calgary and Vancouver and purchase all these companies, right?
Yep.
So how do you how do you know? Is it just how do you analyze that company and make sure that it's a good offer that's coming in if somebody asks you?
Yeah, in the absence of, 2 or 3 offers, it's tough to know that it's market, right? So there kind of has to be a little bit of trust from, the advisor or somebody, actually providing the assessment of, yeah, this is an above market offer, right? I mean, you can do that on the real estate side too, right? If somebody just unsolicited came and offered you, $2 million for a home, like you could reasonably, based on your experience, assess, yeah, this is a really good price for this house. We should probably just try to negotiate and close the deal and move on, right?
Yep.
So that's kind of a very similar type of scenario I think I would go through is, based on my experience, based on my knowledge of the industry, the buyer, the business, just give a really reasonable assessment if it's above market. And if it is, then just, it's hard to close deals, right? So just lock it in and try to negotiate on the points you can, but try to close a deal.
Okay. So buying and selling businesses, like what's the best part of your job? Like why do you do this? What do you love about it?
Yeah, I've done, you and I are both like that growth mindset, right? And we haven't known each other for long, but I know that you're very kind of introspective and reflective and always trying to get better, right? And I'm of that mindset too. And I've done a lot of thinking. So what do I really like about what I do, right? And I like doing the deals. I love it when we get an offer and I'm able to like really find areas of negotiating a better deal, either on the buy side or the sell side, right? That really gets me going. I love looking at opportunities. Like just this morning, I was looking at 2 potential businesses that I wanted to partner with someone else to buy. So I love like just how do we really put this together, right? Like, where do we find the capital? What's the valuation for it? How would I structure this deal? Who would I find to run it? And, how would I partner with them to do that? So just everything around the deal just really gets me going. And, so I'm kind of a deal maker at heart that way. And that's kind of where my passion is. And I think that's where my expertise falls, is just kind of, I'm not going to call myself a visionary, but I do have a good, line of sight on how a deal can kind of come to fruition and really close.
So it sounds like you're that back end guy, analyze the whole 9 yards. But what about like in front of people's faces? Because you said analyzing businesses, and you're talking about like negotiating. But are you talking about like getting in front of people, dealing with people? Is that kind of
dealing with people on the deal side? So like again, kind of these couple of the deals that I looked at this morning, I would know exactly what structure I'd put in place. I would know where to negotiate. And, I know kind of that process, how to facilitate that process. And then once we get to the point with, the people that I partner with and that, hey, this is a business that we actually want to put an offer in, like I know how to go and execute on that. Right. So getting in front of the owner, presenting the offer, telling him, obviously when you buy a business, you're not going to put your best offer, right off the bat. So just knowing how to present it, knowing what's reasonable in the market, and then knowing how to counter negotiate his points that I'm pretty confident that he's going to come back with. So that to me is like, like I'll do that all day, every day.
Okay. Do you have anybody like a protege? Do you train people? Like you've got this course, so it sounds like logical next step would be I'm going to teach you how to do what I do. And like
this is what I'm bad at, Matt. So you enlightened me by sharing that book Rocket Fuel with me, where it talked about kind of this, the shaper or the visionary, and bringing on an integrator, the guy that can execute or whatever. So, I sit in this and have done lots of personal assessment analysis. I did one recently, so I'm a shaper, right? I can envision it. I know how to execute it. My weakness is, the implementation of things, right? So definitely want to start partnering more with implementers, guys that are hustlers. And we chatted about this too, how there's a real overlap between, this selling and buying of businesses and selling and buying of real estate. So it's a lot of the same characteristics. A lot of the people that are successful on the real estate side would be successful on buying and selling businesses side. It's just not even a different skill set. It's just a little bit of a different knowledge base. So, you've enlightened me to me needing that integrator piece. So definitely trying to find those people and work with them.
So let's stay on that topic for a bit. So what do you see this year? What's your plan? How are you going to grow your business? Do you have like a business? Like, I know like a lot of like your personality, my personality, we kind of shoot for the hip. We go and we like go do, and we're like doers, and we analyze and then we go do. But like, do you have like, what are you going to take your business this year? What are you going to do with it?
Yeah. So my goal this year is to buy a business again, right? So I am an owner in a couple of businesses, but not involved in the day-to-day. They're more passive kind of investments. But my goal this year is to buy a business with a partner. And that's what I'm doing right now, is just looking at a whole bunch of businesses that I like, and then trying to find an operator and a guy that I would trust to say, okay, we're going to partner together. You're going to run it. I'm going to help facilitate the acquisition of it. And then if we need to find investors, we'll bring investors. So that's goal number one. And then the second goal is to, what we talked about too, around finding an implementer for my advisory firm, which is called Stono Capital. So, right now it's me and an analyst. We'll do 2, 3, 5 deals a year. And I really want to grow that advisory practice and find an implementer that can execute more on the deal, execute on more facets of the deal. So instead of just doing 2 to 5 deals, we're doing 10 deals. And then the year after that, maybe find another executor, and then we could do 20 deals. So really want to build kind of a Western Canadian advisory firm. So those are my 2 goals. Find that implementer for this year, so we can kind of double the capacity in my advisory firm, and then also find a business that I could buy personally.
Okay, so the buying businesses is kind of your side gig. It's something that comes,
side gig, but they're so fluid. That what I do for my clients now, I'm just doing for myself personally and an operator.
Okay, and so that capital firm is called what? What do you call your?
Stono Capital is kind of the advisory firm, and then the side hustle is just it's in a holdco. But
okay, so what do you envision for that in 5 years? What do you see?
Having a portfolio of companies. So in 5 years, if I could do 1 acquisition of a business a year. So, and some businesses will, say I buy a business this year, and then that business wants to go out and buy another business. Then, I'm buying a business within that business. But I also want to buy a separate business with a separate operator. So my vision is to have a portfolio of companies with a number of different partners. And the one rule that I've implemented in my life is no assholes policy, right? So really working with not only guys that aren't assholes, but guys that I really like. Like I'd love to find an opportunity to work with you, right? I think we have a similar mindset. So, I'm trying to cultivate these people that I think are great operators, but also people that I really enjoy and like personally, and then finding ways to, just find business opportunities to work together. So my vision is really having a portfolio of businesses that I own with partners that I like, and that aren't really partners, but are become friends and become like, almost like family, because, I know it's hard to do business with family sometimes, but really, that's kind of how I build my relationships, is by working really closely with people that I like.
Yeah, and I think life's too short to work with people you don't like.
Yeah, that's why I have the no asshole policy, right?
And I love that, because they say you shouldn't do business with family, but I think the people that you do business with should become family, because it's almost when you're doing business with family, it's because you're obligated to do it with them because they were a close friend and they were family.
Yeah.
But you're choosing your business partners and they become close, and I feel like that's a much better strategy.
Yeah, and things can go wrong in business partnerships, right? So I guess going back to the no asshole policy, right? Finding people that are reasonable, and that understand that things can go wrong, but finding very logical and business-like ways to solve them. And it doesn't, like, that's maybe utopia, and it doesn't happen all the time. I've had lots of partnerships that not have gone sideways, but haven't worked out. But I feel if you're dealing with reasonable people, that you have, not only a trust, but you have a respect for, then you find reasonable solutions when things go sideways.
Mm-hmm. So I was doing, actually, before you got here, I was filming a video, and it was the top 4 things that I wish I did in my first year in real estate.
Okay.
And I reflect on that a lot. Yeah. Well, the first one is having a CRM. Like, when we were, like, I started in 2007, it was a little bit different. There was no online ads. There was none of that stuff. But having a CRM, so you go, as a real estate agent, you go choose a website, like $60 a month website with no CRM, or just a very basic CRM. It's like, that's the lifeblood of your business. Like, your CRM, that's how you control your clients. That's how you deal with your leads, everything. And I think that was the biggest part. And then the other one, I won't go through all of them and like bore you, but like the other one was chasing deals that are gonna, like, chasing leads that are gonna buy in the next 90 days.
Yeah.
That's it takes such a paradigm shift. I tell people all the time, it's like, I want a buyer who's going to buy in the next 90 days. You don't want a buyer that's going to buy in the next 90 days. And if there was a way to generate leads that were going to buy in the next 90 days, all realtors would be out of business. Yeah. Zillow and all, Realtor.com, all those companies would take over. If they knew how to pick those buyers that were going to buy in the next 90 days, I told them, there's this guy I coach in Winnipeg, and I said, I want you, for the month of December, I want you to find 50 people. His goal was to get 50 transactions. Find 50 people in the next 30 days that will buy or sell real estate in the next 12 months.
Yeah.
Nobody's looking for somebody that's going to buy in September. Some of the people on my team, I'll say, hey, do you want to lead? He's not looking until the summertime. No.
Yeah.
Okay, we'll nurture him, I guess. But if, like, that's still a transaction. If somebody told you, hey, I'm going to buy a business in September next year, would you be like, I'm not dealing with you. I got other people to deal with?
Yeah, no, you cultivate and you nurture that relationship, right? And I mean, there's lots of similarities between the real estate side and the buying and selling businesses side. And you're right, the sales and buy cycle is so much longer than, like, selling, I don't know, milk at the grocery store, right? Like, you can identify somebody that's going to buy milk, but you can't identify somebody in the time frame on when they're going to buy a house, right? You can identify the person that's going to buy a house, but time frame depends on lots of different circumstances. So that's the
biggest
insight.
one.
Yeah.
This is the biggest one. And I tell them all the time, I was like, you want somebody who's going to, like, if you told me today, you said, hey, I want to buy a house. I just decided, I came in, looked at your house. I want to buy a house. Are you ready today?
Yeah.
Absolutely not. There's so many things that you need to get. You need to choose stuff. You need to talk to a mortgage broker. There's so many things that need to go into it. So expecting a lead that comes in that was looking on Google for a home that he's going to be ready to buy right now or next month or next week or whatever, it just doesn't make any sense. So I'll take 1,000 leads that are going to buy real estate in the next 5 years. I'll take them all right now. If I know that they're going to buy real estate, I'll take all those.
Yeah, and then it's the process around how do you nurture those leads, right? And how do they pick you if and when they're ready? Mm-hmm. Some similar kind of concept in my, like, you can't identify when a buyer, like a business, is going to sell, right? Or be ready to sell. So I try to nurture, my leads come a lot through referral sources. So advisors to those businesses, accountants, lawyers, bankers, and I try to nurture those relationships and really treat their clients that they refer to me well, and then hopefully I'll get a referral on another client. So, different kind of like way of attacking it, but it's still that really long sales cycle and, nurturing the client. So they choose you if and when they're ready to kind of execute.
Of course. And so you have like that, you have the repeat and referral business, and then you also have your value base, right? You've created the website, you've created your value base.
Yeah.
There's a ton of value there. So do you find people using it and then coming, like how long you just started with the website actually, right?
Well, I've had my website Divestopedia it's coming on 10 years now.
Oh, wow. Okay.
Yeah. So that's created some eminence in the marketplace. It's almost like qualified me to say, okay, this guy's not an idiot, right? Like he knows what he's talking about. Yeah. He puts out good content. He's like shared a lot of information for me. So, again, if and when I'm ready to sell, this is a guy that I'm going to consider talking to as being an advisor for my business. So I feel like that's just kind of gets you at the table, right? Where it's kind of qualifies you. It's already put you in the conversation of being somebody that's knowledgeable enough to execute on selling or buying a business. Mm-hmm. So that's kind of what I feel that does. But it's been like to generate leads. Maybe it has, but it's hard to really
measure.
Yeah, it's hard to measure.
Yeah. So my mentor, he would tell me this over and over and over. He'd say 5% of people are in the consideration phase. Yeah. Like, it doesn't matter what you're doing. 5%. Like, you want to buy a house? Only 5% of people are even considering buying a house right now. Yeah. You want to date someone? Only 5% of people would actually consider you to date you. You know what I mean? So he said, you're trying to speak to people where they're at. Yeah. If these people are way down the road, just giving them information about businesses, about how to, like, if you ever thought about selling your business and creating yourself as a professional in the market, that's a huge part. And I think that was a big shift when I met him, is that creating a knowledge base, creating value to people so that when they're actually in the consideration phase, you're the one that they turn to. Yeah. Right? That's a huge
Have you ever read the book Ultimate Sales Machine?
No.
No, it's pretty good. Yeah, Chet Holmes, he talks about that. It's like the pyramid or whatever. Like only 1% of the market is like ready to buy right now, and 3% are considering it, or 5% are considering it, and 10%, if you offered it to them, might consider it, right? So, and then the pyramid goes down. But yeah, you're right. I mean, like, how do you create that sales funnel, or how do you target that 1% that's immediately ready to buy now? Really hard to do in our businesses. So you need to find some kind of alternative channels to be there, ready, and qualified when they're ready to execute.
Mm-hmm. And I've been doing this consistently for 2 years, where I'm just like value. And just in the last year, I've had realtors reach out to me saying, I've been following you for like a year. Yep. And they want to come to our team, or they want to do coaching, and they're like, oh, you did that video on, and I don't even remember the video. I remember I met with 2 young realtors, and they were like, oh, I just give a tip about, hey, do you know anything about Edmonton real estate? All you have to do is set up a search on Google that says Edmonton real estate. Every morning you're going to get all of the articles on Google that have to do with Edmonton real estate. Pick one of those, make a video. Pick one of those, post on a blog. Pick one of those, send an email to your clients. And one of the young men was like, oh, I do that all the time now. It's such a great tip, right? And so stuff like that you can just help people with value, or help people with like stuff that you've learned.
Yeah, I mean, I don't know where I learned this, but like Gary Vaynerchuk, right? He's always it's jab, 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 right hook, right? So you're always giving, and then asking, right? And that's what I find, like, just educational information, right? Like, but really, I think you and I have, not only the growth mindset, but we also have like, hey, we really want to educate. We really want to, put useful and valuable information out there for free. Mm-hmm. Hopefully it comes back in spades, right? In terms of people trusting you and seeing you as an expert in the market, and then engaging you. So mm-hmm. I think it definitely is, almost a necessity nowadays to do that.
So from your website and your online courses and stuff like that, do people finish the course and then come to you and be like, "This was great, but I need more"? Or
Yeah, for sure. Yeah, and sometimes they'll engage me, right? And they'll say, "Hey, like I went through your course. Now I'm ready. Now I feel like confident that I need your skills to go out and do what we're talking about doing." So, um, for sure, it's that's the purpose of it. It's almost like I created it as a product to provide value to the marketplace, and I'm an entrepreneur too, so to generate some revenue, some passive revenue. But it was almost like a step for people that aren't ready to engage me yet, right? To say, hey, like, you know what, you're not ready to go out and do this yet, but I have a real, not low value, but a more like not as expensive option for you to learn and to get up to speed and to be ready to actually execute on this, right? So that's kind of what it morphed into, was like a way for me to politely say no to people that I couldn't work with exclusively or in an advisory capacity. But to say, hey, like, no, I can't work with you in an advisory capacity, but I have this course that's $500 that you can buy, and then we can start to build a relationship that way.
hmm And would you advise somebody, like, let's say they're in Miami?
Yep.
Would you like help them out there with an?
Yeah, it's funny. I have the course is sold like globally. It's like I'll look at the list of people that have bought it, and I'm shocked at, like, India, Australia, the U.S., across Europe, and the principles are the same. And I think that the value is just as valuable in India as it would be here locally, right? So, and then it really depends on, is the client like, I only have so much capacity in my advisory firm, right? So, is the client big enough? Do I think that they're committed to really execute on this? So it depends on some variables of them being a really good fit for me. But yeah, if they're in Miami, for sure, if they fit all the kind of check boxes and make a great client, and I'd be able to deliver a ton of value, then yeah, definitely.
And there's no licenses or anything that you need when you're doing
Not on the sale of a business. There are some local licenses that you would need, but not on purchasing businesses and advising.
advising, yeah. Okay. So what's next for you? Like, what's your
Yeah, like I said, I got the two goals, like buy a business this year. I'm super excited about that. I've kind of like, again, I've been passive in a few businesses, but I haven't really kind of pursued the acquisition of a business in the last couple of years. So I'm excited to get back into that. And then just advising on clients. I have a couple of engagements right now that we're in market in to sell businesses. So trying to get those closed, and then move on to new clients after that. But
what's the bottleneck in your business?
Me.
Is it?
Yeah, it really is. It comes to a point where it really needs kind of the expertise of the deal maker to facilitate that. But there are lots of things that I could implement beforehand to increase the capacity. So, as I mentioned before, I'm really good at we get an offer in. I'm good at negotiating that offer and then pushing it to close. So that's probably like 3 months, the last 3 months of a transaction, right? But I can. There could be a point where we're winning more work, we're winning more engagements. The preparation and the marketing of it, like, other people can do that, and other people, frankly, are probably better than me at doing that. So finding a person that's complements me and is really good at that end can probably double my business, and then I just come in at that point where we receive offers and we're negotiating and we're kind of really moving towards closing a deal.
So do you have like some like basically what I do is I talk to my manager and I say, hey, look, find the lowest dollar per hour job that's taking up too much time, and then replace yourself, and then find the lowest dollar per hour job and then replace yourself. So is there some way you can replace yourself in your business with somebody who's not a superstar like yourself?
Yeah, I'm not a superstar by any means, but there are, for sure, and sometimes it just takes a little bit of letting go. So that's a little bit of my self-reflection and things that I need to get better at and improving, is just letting go. Like, that rocket fuel honestly changed my perception. So I'm super grateful for your suggestion on that book. But I need to find more of an implementer, somebody that can execute on this. What I know what needs to be done. I don't know what it is, but like, it's just my personality, right? It's the way I'm wired.
Mm-hmm.
I'm just not that guy to get into the weeds and into the details and set up the processes and the systems that are needed. And I just need to find that person to execute on that.
Nice. Anything else? Ask you a whole bunch of questions.
Hey man, like I said, I want to work with people that I like, and obviously you and I are developing a relationship here. So I'd love to find an opportunity to do more stuff together.
Yeah, for sure. Like, and I love that. Like, we met at the gym, and I love, like, you just meet people randomly just start talking, and then you just like their their mindset or their vibration, whatever they're on.
Yeah.
It's great.
I'm a believer in that, right? Like, you kind of have an energy, and energies, like you said, are vibrations, and people just vibrate at the same kind of level of energy. And once you find those people, you want to continue to develop that relationship and continue to surround yourself with people that are going to make you better. And, you push me at the gym. I see how hard you work at the gym. So I lift those extra 10 pounds when I see Matt pushing some weight. And, I think you do that for your business too. So you give me a lot of great ideas and want to push me to kind of continue to grow. Right.
Yeah. Yeah. And I think there's so many opportunities, and we have so many people in Edmonton who are on that same mindset, and it's tough to find them sometimes. Cause I feel like I talk to a lot of Americans, and down there, it's like go, 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 go. The American dream, the real American dream. The real American dream is you could work hard and you'll be successful. The new American dream is you could be whatever you want to be. You don't have to work for it. Yeah. And I don't believe in that. And so I feel like a lot of people here, it's almost like to be successful or to be too driven, you're shunned. And it's like, what's wrong with you? Like, how much money is enough? You know what I mean?
Yeah, and I never question how much somebody needs, right? Like, if you say you need $1 billion, you need $1 billion. Like, that's not for me to judge, right? But I do agree with you that I think people, like, it's the overnight success, right? It's the get rich quick scheme that people are chasing, where, I like the Warren Buffett mindset. Like, anybody can be rich. You just need 40 or 50 years to do it, right? And you need to have that perseverance and that patience to get there. I also think that there's the other side of the coin. So it's not all about just like making money, but it's about saving money too, right? Like, how do you have a lifestyle that lets you save money so you can invest in buying a business, right? A lot of people are now about, kind of the external showy type stuff. But it's how do you minimize your lifestyle and focus on simplifying it so you can have the things that are really important. Like, you can do everything. I like the saying, you can do everything, but you can do anything, but you can't do everything, right? So picking that one or two things that you really want to do, but recognizing that you have to say no to those 5 to 10 other things that you can't do. So
yeah, that was what my mom used to say to me. You can have anything you want, you just can't have everything.
Yeah. So there's a Drake song like that too, isn't there?
It's so true. And I think, like, I deal with young real estate agents first year or two in the business, and they just want to be successful. They want to have that, like, what they see on TV immediately.
Yeah.
And I don't know if it's the delayed gratification part, or if you told somebody you're going to get it, it's coming in 10 years, you're going to get it. I think the majority of people would put in the work. I don't know.
I disagree with you on that one.
But if they knew 100% that it was coming, because I feel like what stops a lot of people, and this happened to some of the agents that I mentor, is that I said, well, you're dealing with this lead. What about this lead? But this one's a guarantee. And I was like, I think a lot of times people go for that guarantee, and because they could get.
I don't know.
I know it's a tough.
I agree with you on that one, because there are so many, like, kicks in the stomach over the it's guaranteed, but you're gonna encounter so many obstacles over those 10 years that I think people just, it's hard, right? Like, I've had lots of failures, like, and I did an exercise the other day because, my confidence level kind of like is like, holy, am I cut out for this? So I did this exercise the other day and I kind of listed all my successes and failures just to kind of like really solidify that. Yeah, I've had some failures and some big ones, like some, really massive failures. But I've had more successes along the way than I've had failures, and I actually had to write those down. But I don't know if I agree with you if you said like success is guaranteed at the end of 10 years. If how many people would stick it out?
Really?
Yeah.
Well, I don't even maybe not stick it out, but I mean, would try. You know what I mean? Like I feel like people don't try because they don't believe that they can get there.
Yeah, belief is a big part of it for sure.
Yeah. So if I told a new agent, it's like, hey, you're gonna sell 10 homes your first year. Next year you're gonna sell 20. Next year you're gonna sell 40. Next year you're gonna sell 80. Next year you're gonna sell 160. Would they do the same consistent work every single year to do that? Like, I think for me, if I trust somebody like you who knows what they're telling me that I'm gonna do it, I'm like, okay, I'm gonna do it. I'm an action taker and I'm going to do it.
Yeah.
But I feel like a lot of people, they're either skeptical in the person who's telling them to do it, or they're skeptical in themselves in actually achieving it and or following through with it.
Yeah.
Right?
Yeah, that's a tough one, man, because there's just so many variables there. Things become easier to do when you're passionate about it, right? And this is like I'm in my 40s now, and it's took me a long time to figure out A, what I'm good at, and B, what do I really like doing. And I think when you can find that, it becomes a lot easier to be persistent with it, because it's like you're passionate about it. Like you're not, like it's not work to you. It's like you can get up in the morning and it's actually fun, right? So I think you can give the person the recipe on how they will be successful, but there's so many other variables that come into it that, are they going to stick with it or not? I don't know. It's a good debate, but I'm not. I don't know if how many people would actually follow through on it. I think there needs to be that recipe for success needs to be very specific, with passion, with mindset, with, again, kind of like a little bit of luck. If you have luck early and you're successful at something, maybe you'll stick at it a little bit longer. So there's just lots of variables there.
Mm-hmm. Yeah, and I being okay with failing is another big thing too.
Yeah,
that's one thing. When I was first my career in real estate, I was like, I got so down when I failed. I have an agent on my team. He has 3 houses pending right now, and in this month, and he got them all in a week, and it looks like 2 of them are going to fall apart. And it's like, oh, you got to be okay. And I spoke to him last week, and I said, listen, whether those deals you are sold, firm transactions, or they walk away and you have 0, they're gone. So remember, service those people to the best of your ability, but focus on the next ones. And he's like, yeah, I haven't been calling my leads. I haven't been dealing with these people, and I'm losing. And I was like, yeah, man, you just got to always be consistent. You know what I mean? Like,
yeah, for sure. And, like we were saying, there's going to be lots of kicks in the gut over the 10 years, right? So can he still get to that successful place where in 10 years, yeah, he can, but how many people can stick that out, right? How many people can get kicked in the gut 20, 50 times, and maintain that certainty that they're going to be successful at the end of it?
Yeah, definitely.
Yeah, it's a good conversation.
It's like, I would love to just talk to somebody who's quit. You know what I mean? Have a conversation.
Yeah.
Like I deal with a lot of people on our same mindset level, on our same like ambition level. And I would love to talk to somebody who just literally quit, and them to be completely honest with me and just be like, why did you give up on your dream? Like, why did you like somebody who's in our position, but then totally just went back to nothing.
Yeah.
And they were like, I'm just going to do.
Hey, man, I've thought about quitting lots of times, right?
But there's a difference. You think about quitting, but did you quit?
But I've thought about it.
And, I thought everybody thinks about it. That's the thing. Everybody thinks about it. Is this for me? You know what I mean? Am I on the right path? Maybe I should just live the simple life.
Yeah. I guess in those moments, what did I do to kind of either, talk myself out of it? I haven't quit. So, I think I looked at the options. And one thing that really helped me is just knowing that I had options. I think when you feel like you're stuck, that's when you feel like, okay, I just got to quit and do something else, right? But if you feel and actually explore other options, it makes you feel like you have a sense of choice, like you have an ability to choose. And for me, that was really enlightening to say, hey, like, yeah, I'm feeling like quitting, but I have other choices, right? So if it didn't work out and I choose these other choices, then that's on me. But if the other choices aren't what I want, then I can't quit, right? Like it's kind of like I don't know, it's almost like a little bit circular, right? Where it was like, okay, I can't quit because I've explored the other choices and I don't like them, so quitting is not an option.
Burn the boats.
Yeah,
A lot of people need that.
yeah,
You burn the boats so you're not going home.
yeah. Well, for me, it was the opposite. For me, it
Yeah.
was creating other options, but recognizing that the other options weren't as attractive. So like now, because I didn't really think through the other options, I just thought, well, I'll quit and then I'll figure it out. But now that I've actually went through the motion of looking at other options, because I'm really considering quitting and seeing those other options aren't as like, it would just make me miserable. Then I was like, yeah, these other options aren't an option anymore because they wouldn't make me happy.
Mm-hmm. And
Sorry, that's super
no,
super convoluted.
But this totally resonates with me because running a team and building a team and doing what we're doing is tough, and we're more profitable if I just took all of the business and ran it on my own. We're more profitable.
Yeah.
And like for the last couple of years, my being in the business myself is what's paying for the team. And everybody's like, oh, you have a team, whether you have 6 agents or 10 agents, it's like they're like, oh, it must be so lucrative. It's like, unless the agents were like me, like we're gonna take a loss on that side. So but I'm investing my money, my commissions to build the team and learn and get bigger. So it's the same thing. It's like I've thought many times about going back as a single agent and just killing it on my own.
Yeah.
But
it's not what you want to build, right?
No.
You want to build something else. And going back to the point of like, kind of getting quick or getting rich quick, right? Everybody kind of has that mentality now. So some of the wealthiest people I know, they were cash poor, but asset rich for a long time, right? So they were always reinvesting back into the business, and they didn't have like the fancy cars and the big houses. It was only until they really kind of, built their assets that it became almost like a passive income stream. That's when they started to build cash wealth as well. But yeah, a lot of people that are in pursuit of this growth, it takes a lot of reinvestment, right? It takes a lot of exactly what you're doing. You could be, cash rich by doing lots of deals, but you choose to be asset rich and to build up, an organization, build up a team, build up a brand. And there's lots of, I have lots of admiration for guys like you that kind of choose that reinvestment back into building, an asset that then creates, real wealth, not just like money.
Mm-hmm. And also, so I was talking to my manager about this. I was like, I want my agents to be more successful than I am.
Yeah.
And I was like, I think that's what it shows that you're a true leader, is that I have more invested in my agents being successful than I have in myself being successful. And when he called me and said he had 3 deals this month, I was so excited. If I did 3 deals, I wouldn't care. Doesn't matter to me. But because he had 3 deals, and like I messaged the manager and I was like, oh, like he's got these deals, and it's just like I feel great and I feel like I contributed. I feel like he's growing, and I feel like he's just gonna keep going on that trajectory. And yeah, that's what I love is when my team.
Yeah, man, I can hear the passion in your voice. You just talking about it, right? And that's like, I was talking about options, and so you laid out the option of just being an agent and crushing it, but you would give up that passion that you would have for growing people and building that team, right? So, at the end of the day, because you have so much passion in that, the other option isn't an option at all because you wouldn't be happy, right? So,
Yeah.
Again, it goes back to my idea of just, thinking through the options and, seeing does it make you happy?
Mm-hmm. Yeah, I like that. I like that.
Hey man, we talked for a long time. I was
I
thinking
know.
in my head,
I know.
who's gonna listen to this thing for this long?
Oh, yeah. Sometimes I get off on a tangent, but it's like when we're talking in the gym, it's like,
Yeah.
okay, well, at least we're gonna get this on paper. People take a ton of value. You cut it up, and people take a ton of value.
Yeah,
from it.
for
So,
sure. That's awesome.
Yeah, but I appreciate you coming.
Yeah, man, this has been so much fun.
And we're gonna go out and do our thing, and I'm sure we'll come back and do this again.
Yep. And not only that, we're gonna partner on something for sure.
Yeah, for sure.
All right, man. Thank you.
Thank you. Appreciate it.
Yeah.